Hey all, welcome to ShareTreck where science meets investment, and I'm your host Raj. Friends, in today's video, I'm unpacking a hidden contradiction in the AI economy that I think most investors are ignoring. We look at how big tech's AI-led growth could actually shrink consumer demand by destroying jobs and wages. I'll also walk you through what I think it means for market consolidation, future merger and acquisition waves, and whether this rally is built on solid ground or not. Today, we are going to talk about a contradiction at the heart of the AI economy, and it is something the market, I think, isn't pricing in yet. The AI Magnificent Seven, Apple, Amazon, Alphabet, Microsoft, Meta, Nvidia, and Tesla, all are growing fast, automating faster, and pulling away from the rest of the economy. But here's the problem. What happens when these companies become so efficient that they kill the very demand they depend on? And you may ask, why is this important? It's important because these are the companies which are driving the NASDAQ and the S&P 500 indexes up. And if they fail, you'll see a precipitous drop in the indices. And that's why we as retail investors have to be cognizant of this. And that's my opinion. And I would like to hear from you. Please put it in the comment section if you agree with me. Now, next, I think let's go on and let's lay out the contradiction clearly. Let us say AI boosts productivity by replacing labor, especially in white-collar jobs and increasingly in jobs that are physical, that need physical dexterity. You can call them physical AI. Now, all of this cuts costs and boosts margin in the short term. But wages are how people consume. So if you remove labor, you remove income. If you remove income, you shrink demand. And we have seen versions of this before, between 1990 and today. US productivity rose around 60% during that period, but real hourly wages only grew by 16%, according to Bureau of Labor Statistics. Now, AI is speeding that up, so companies that adopt AI today are placing high-stakes bet. Will automate, become more efficient, and gain market share, even if the overall pie is shrinking. And that's the thought process, I think, that makes these companies to invest heavily in AI. Before we proceed further, if you're finding this perspective different from what you usually hear, hit that like button to help the algorithms. It really helps this kind of content reach more retail investors like you. Now back to the subject. Let's be clear. This is not growth for everyone. This is survival of the most automated. Each company is betting they will be the last one standing. But what if they all automate together? Then we have fewer workers, less income, a consumer base that can't afford the products and services anymore. And if a company chooses not to automate, it will have to shut down because it can't compete in pricing. And that's not a recipe for long-term growth. That's a recipe for a deflationary feedback loop. And that's the way I'm looking at the future when I see it unfold in a logical manner. So the question is, what happens next? I think we are likely to see more mergers and acquisitions as smaller players fold and get absorbed. There'll be fewer competitors, bigger tech monopolies, companies that survive by capturing existing demand, not creating new demand. Think like Microsoft buying AI co-pilots to dominate office productivity, or Amazon layering AI across logistics to squeeze out rivals. But it also circles back to the same problem. If there are fewer consumers with money, who are they selling to, right? So as the purchasing power goes down, the competition for the smaller pie becomes much more intense. And here's where things get complicated. This contradiction may take years to fully play out. AI adoption is accelerating fast, but the economic impact on jobs and wages, in my opinion, is lagging. And then there's policy. Governments could introduce UBI-like transfers. I have spoken about that in detail in my earlier videos. They could look to expand wage subsidies or even tax AI-driven profits to redistribute income. And all of that could delay or soften the demand collapse. But unless new industries emerge that can absorb the displaced workers, we are heading towards a future where tech grows while society stagnates. Friends, if this kind of strategic investor content helps you think deeper, subscribe to ShareTreck for weekly insights where science meets investment. Now, my question to you is, what does this look like in your country or sector? Are you seeing early signs of this contradiction? job losses in one place, but record profits in another? Please drop your thoughts in the comment section below. I read every one of them and I respond to all of them. Now, let me try to bring it all together and summarize. So what I'm saying is that right now there are a whole lot of companies, and companies like NVIDIA and Palantir, all of these are going up basically because people are still building AI infrastructure, and there's expectation that all companies across the industry will start adopting AI, and therefore these companies are ramping up. Now, my thought process indicates that if this is the rationale, the chances that we are going to see it come into fruition gets less and less as time goes by, because all the companies in various sectors are going to be looking at their competitors. And when they see that their competitors are going for AI, they're going to look at their own funds flow, their cash position, their balance sheet position. They're going to evaluate if they're going to be able to compete with AI. If they are not able to compete with AI, they will have to do some kind of strategic restructuring. That strategic restructuring could involve merger and acquisition. Either they acquire a company which is ahead in AI, or they get acquired by a company that is ahead in AI in their sector, or they could find some synergies across sectors and merge with some other company and pool their AI costs together in order to survive and to be optimum. Either way, then a lot of employees are going to lose their jobs, because you now need lesser employees to accomplish way more thanks to AI. And this is not just in intellectual jobs. This is also into cognitive areas where robotics merged with AI can do a whole lot of job replacement. So now, having said that, the next effect is that all those people who have lost their jobs, they are not going to have money to buy. And the remaining few who are working in these companies which has got a higher level of productivity, they may have decent income or good income, but they are not going to be sufficient to support the entire industry, which has invested heavily in AI. So going forward, expect that a whole lot of companies might either merge and acquire, or they may just shut down. Expect a whole lot of people without jobs. And in this kind of environment, if you go back to look at NVIDIA creating a whole lot of GPUs, expecting a whole lot of data centers to happen, and a whole lot of factories to be built with AI. Now, if there is no demand for the product because people don't have money, how does this translate back? So I'm thinking this is a slowly unfolding process. It's a dynamic which will unfold over a few years. And therefore, at this point of time, we see NVIDIA marching up, and it is followed by Meta and other companies which are using AI, Google, Microsoft, and all the like of them. And then, of course, Palantir, which is again going to offer AI services to various companies. And that is going to make the companies not have to invest themselves in AI, but they're going to pay a handsome amount of money to Palantir. So as they get into the fold, the number of companies available will also go down. So this is what I'm looking at. And why it is important for us, again, is because if the Max 7 starts dropping because their future earnings are going to be lower, then what will happen is the entire index will come down. And this is not going to happen tomorrow, but this is a gradual process. So either way you cut it, over a period of time, the index has got to come down, unless there are steps that are taken to make sure that retail investors like you and I and ordinary citizens have some kind of an income with which they can buy services and products that are offered by this AI-enabled economy. Well, friends, that brings me to an end of the summary, and I'll catch up with you again in the next video. Bye for now.